welcome everyone to the Mogul live stream event. If you can't hear us, definitely let us know because we are setting up in a remote location. Some of you that are investors might recognize the living room pictures as our Alcaraz property out of Lizella, Georgia. Can they hear us? Just making sure.
Yes.
You are not logged in. So thank you for that one.
I know we are in. You can see us and hear us.
Yeah, he can, or they said it.
Did everyone hear us? Perfect.
Yes. All right. Perfect. All right. Well, appreciate you all joining. We are in Lizella, Georgia, at our off-site retreat with the entire team, which has been incredible. I mean, and with me always is my co-founder Joey Gumatau. Joey, do you want to start it off and give a little bit of overview of the weekend, how things are going?
100%. We're calling here from the Alcaraz, enjoying a nice company retreat here. We have some incredible members of the team, some old, some new, and we're super excited to be celebrating some major milestones that we're hitting going into Q4 for the year. Really strong performance across the board. Corporate properties, everything is going super well, and ultimately we're excited to introduce you to some members of the team.
So without further ado, I think we can introduce one of our longest team members here, our CTO, Eitan Prince.
On up.
Thank you. Joey, audio is not great, actually. Wait, can you hear us? Is it yelling? All right, whatever. It should. All right, we're good. All right, so Eitan, do you want to introduce yourself?
Yeah, I'd love to. So my name is Eitan Prince. I joined Mogul about pretty much 2 years ago, right? It's been really awesome. I originally went to college as a computer science major, was part of 3 different startups. So I love just the startup scene that we're in, and I love solving problems. And Mogul is just it wasn't fun something I love working here.
Hell yeah. All right, what is a fun fact about you? If you don't have one on the spot, I always hate when people ask you fun facts, but I'll ask you a fun fact.
Fun fact, I did a lot of jazz filming back in the day, and I was on TV one time playing jazz.
Have fun.
That's very cool.
What does that? We're good? Wait, can we guys have this?
Sure.
I'll do monitor. Oh.
Oh. You just closed everything now. All right. Why don't you keep going while you're better?
No, well, I don't think we're even on nothing. But anyway, sweet. Are we? Michael, are they good? We're sending out a new audio, and the Wi-Fi has been a little bit hit or miss as we've been using hotspots. So I just want to make sure that it's all good. So jazz band. All right. Well, thank you. Yeah. Any questions from you?
What's your funniest experience there?
My funniest experience at Mogul.
Yeah. He's like, what can I share?
I don't even know. Yeah, what can I share? Drawing a bit of a blank.
No problem. We'll come back to it.
It's always a good time in the office. Everyone's great to hang out.
Well, I have one funny moment. When you first started here, every time I approached you with a question about our site, I would ask, can we do X, Y, or Z? And you would always answer with, well, anything's possible.
That's true.
And that was an incredible. Okay, should I want my mark or are you good?
Yeah. Fingers.
All right, sweet. All right, good. All right, anyway, well, thank you, Eitan.
Thank you.
Nice. Joey. Well, next up.
Yeah. Yeah, Ryan in here.
Ryan.
Ryan. Okay.
How's it going? My name's Ryan. I'm one of the new hires. I recently joined Mogul, joining the dev team with Eitan. Sort of a similar background. I went to college in Washington, D.C. at Georgetown. I was a computer science student as well. Before Mogul for the last 2 years, I worked at a tech startup as well, and kind of similarly, I guess it just attracts like-minded people. But yeah, I'm just like all about the grind, all about kind of moving, growing fast, and really innovating and making cool things happen. And it's only been a month, maybe a month and a half here at Mogul so far, but that's been all that's happened, and it's exceeded expectations, and it's been really fun to be a part of.
Heck yeah. Love that.
All right, what's your, I'm curious your question.
For Ryan?
Yeah.
What's been your favorite part of the week so far?
The week. I honestly think being in my first month, like month and a half in, just been like learning a lot. Like building stuff, whether it's here or in prior roles. That's all good and fun, and I am definitely getting good experience there. But kind of what attracted me to you guys in the first place was just like you guys are doing something, or I guess we're doing something really cool, very innovative. It creates a lot of opportunities for people, and I just wanted to learn a lot more about it. So kind of getting that. Learning more every day, getting exposure to what you do, everyone plays a different role, and it's been very rewarding so far.
Thank you.
Yeah.
Great answer.
What's your favorite part about the property?
This property, it's beautiful down here. There's a big lake out back, like 180 views of, I don't know how big this lake is. Like there's a pool, there's a deck that we're hanging out on, doing some work earlier. There's Aton would show me there's an attic, there's more bedrooms than I can count. Everything's really pristine. I don't know. I can't really pick one thing. It's beautiful.
Yeah, it's been a cool experience. Right on the lake, incredible location, incredible amenities. Huge shout out to the team and to the operator.
Awesome. Well, thank you, Ryan.
Thank you guys
for joining us. Next up on the agenda, the newest member to our team, Larry Cummings. Welcome to the team. All right, well, let's hear it. Let's hear a little bit about.
A little bit about me.
Yeah.
From Delray Beach, Florida, originally. It's a great spot I've never been. Amazing place to grow up. After college, went to a couple of different investment platforms, or actually one primarily. This is my second one. I'm so glad to be back. And then after that, my first investment platform gig, I went to Columbia to get my master's degree in real estate development and finance, because real estate's really my one true love as far as asset classes go. In the past year and a half, I was working at a private equity firm, a small one started by a Columbia alumnus. But I really wanted to get back into the startup scene, and so I reached out to my friend Alex. We've been talking about Mogul for years, and the time really felt right. And I think the product and everything that they're building here is endlessly fantastic, which is why I wanted to join. And literally, first time meeting the team, they've already exceeded expectations, and I couldn't be more excited to be here. And I'll be on the capital formation side, so working with our existing investors, trying to provide the best experience possible, while also optimizing onboarding for new investors and finding new channels to reach out. Incredible. And I think we did cut out on video for a minute there. Oh, we're back. We're back. It's a little bit grainy, but we're back.
We're back. All right, we'll move it up in a second when we introduce our next member. But all right, Joey, what you had a
For Larry?
Yeah.
What are you most excited about? Honestly, to get to know our investor base and see what they love most about the product, because it's best to communicate what they love, because that would resonate with our newest investors, and to just get my hands dirty and get to know every nook and cranny of this platform and really grow it and make it special and grow the message so I can reach out. Yeah, incredible answer.
That was a strong answer. And I mean, you did touch on a little bit about why you joined Mogul, but why should someone invest in property?
Well, I mean, the team works so hard to source the best properties possible for you guys. They go through so much diligence. I've literally seen them trying to close new deals and due diligence on new properties while we've been here. They never stop working for you guys. And I really think the asset class and the timing is just really right for this. I mean, you got two ex-Goldman guys who've done a lot of finance in their day, and if they felt confident enough about something to be Goldman Sachs, I think it's definitely worth something betting on.
Hell yeah. Well, thank you, Larry.
Of course.
And the next one, he actually joined our team a while back in a different role, and has since joined us as the acquisitions director of real estate. Joining us, Michael Gonzalez.
Thank you.
All right, welcome. Yeah, let's show
Yeah, my name is Michael Gonzalez, Director of Real Estate here from Pittsburgh. Went to school at Ohio University. From OU, I went to consulting at KPMG for a few years and then hopped on the debt side of real estate and mortgage business before starting at Mogul on kind of the sales end with value adding on the real estate side, and made a full transition a couple months ago on the real estate side underneath Joey.
Yeah, well, you've been one of our earliest believers. I mean, when we first had the conversation, I remember when we talked to you in the sales role initially, and you were grilling Joey on loan documents and assumptions around underwriting and battle testing. I remember Joey coming out and being, holy crap, that was awesome. So why, I guess, Mogul for you?
Yeah, I think it just makes so much sense. And, real estate investing is a great wealth generator. Everyone knows it, but there's a lot of hurdles in the traditional way of doing it. And we really break down those barriers. And I tell everyone, my first interview with Alex over a year ago, one of the final things I said to you was, whether I get the job or not, you have me as a customer, because I've always believed in the product from the start.
Incredible.
That is a strong answer.
Incredible.
That is a strong answer. Wow. All right.
How are you feeling about the current? Obviously, stepping into the real estate, a huge responsibility. We've set a pretty high standard for the bar that we deliver in terms of product to our consumers and our clients. And so, what are you thinking? We just had a rate cut. How are you feeling about that?
Yeah, I think analyzing different business plans within the single family rental market is important. And kind of we touched on today. Lower rates are always good because that just means more cash flow. But being purposeful around the business plans that we're targeting on the acquisition side is important. And it's, when everyone knows that we're huge as a pad split, and that's going to be a key part of our acquisition strategy going forward.
Absolutely. And we're doing some pretty innovative stuff on the financing side now. So cool updates to come in your term.
Absolutely.
Very good. I think the audio is cutting out, so I'm going to move the camera closer because I know you guys have some very important stuff to go over. So give us 1 second to rearrange here. I think we'll just move this up.
The chaos of those watching, we're doing things today.
All right, Michael, you should move over to the seat that I was in. Okay. Here you go.
Right here.
Here we go.
Incredible.
How's this? Is it better with audio? How are we looking? A little bit better, hopefully. Awesome. Perfect.
Good stuff.
Good stuff. I'll let you guys go.
All right. Good deal.
Perfect. Give me 1 second to pull up the property.
While we're doing that, I believe there was a question that came in. If you see me off camera, just looking at the different comments, so feel free to add those in. Are we able to withdraw rewards and monthly dividends as they come to us? Yes, for the dividends. For the rewards, they actually come in as property credits that you can then invest. But right now, I believe Joey and Michael are going to walk through a pretty incredible new property.
Awesome. Why don't you take it away, Michael? Give us a little qualitative and maybe quantitative update.
Yeah, I mean, what's a mobile webinar without a new property launch?
Yeah.
And this, if it looks familiar, that's because it is the same seller, the same developer, and same off-market opportunity in Houston as we got for the Art House, and actual identical down to the square foot of the Foundry. And this is the Rock House. This is a 10-bed, 10-bath pad split in the 5th Ward of Houston. Really super excited about this one. From an underwriting perspective, super excited, very clean. And I guess we could just do a lockdown from the top on the property itself.
Yeah,
and
absolutely.
Houston, there's big spike in population. There's a big affordable housing crisis, and the pad split model makes so much sense in that regard. And this specifically is more of a luxury pad split offering. And by that, I mean there's 10 ensuite baths with each bedroom. So that not only sticks out in the market in terms of pad split inventory, but it also caters to a different type of tenant base and tenant profile. And we're seeing a lot of young professionals. This is actually very close to downtown Houston. And in the zip code that's located in, have a lot of positive metrics with pad split performance within. So super excited about this one.
Yeah, it's cool to see pad splits that not only are along those good kind of transportation arterial veins in major MSAs, but also relatively close to downtown where a lot of things are happening. So
Yeah.
it's really cool to kind of see the difference in tenant base, the premium rents that we can achieve with a product like this. And a 10-10, I mean, it really doesn't get better than that.
Yeah, no,
Incredible
absolutely.
density. Yeah, you're talking about one bedroom releasing up in a month. You're talking about a 10%, decrease in revenue, right? Versus, a 5-bed, 6-bed, you're talking about a lot higher margin.
Right.
So just incredible operational efficiencies there, incredible density. Super excited about this one.
Yeah, and with 10 bedrooms, that's 10 units providing cash flow at a price point of $635,
Yep.
which is very, very strong. The average weekly rate for a private bathroom in this zip code is $298, and our underwriting is closer to that $250 per room per week, which is conservative. That is our style, with putting a haircut on rents, being prudent with underwriting expenses.
And that's in the base case, correct?
That's on the base case. That's on the base case. So this could be a very, very strong performer in my opinion. I'm excited to see it play out.
Likewise. When you're thinking about your underwriting, just talk us through how you typically, forecast your OpEx, right? When it comes to your taxes, your insurance, your utilities, miscellaneous costs that are unforeseen. And, you and I have had the chance to dive into, our monthly income statements and our dividend distributions pretty in depth at this point. Curious to hear about your thinking about them.
Yeah. So for the taxes, I look at comps. I also look at different cities have kind of tax calculators. So you could throw in the proposed value of the new purchase, and then that kind of can spit out what can roughly be the taxes. Homeowners insurance, we're seeing a bunch. Obviously, the more deals that we do, we have a better sense of what they're going to be coming in at. So really conservatively estimating the premiums by a good 50, 100, sometimes even more per month on the underwriting side just really puts in a buffer, and it's always better to under promise and over deliver. And with miscellaneous costs as well, we just keep collecting data on our already existing portfolio, which really feeds right into how we can project out the miscellaneous and the new purchases.
100%. Well said. Talk us through the capitalization on this one. We're working with on the lending side. How we get in there?
Yeah. So we're working with C2 Financial on the lending side, 75% loan to value, and we always capitalize traditionally just 5% across the board on closing costs, loan costs, vacancy maintenance reserves, and also capitalize in the fee. It's very important that we are conservative on the capitalization, having a buffer and reserve for maintenance and vacancy over the lifetime of the whole of these properties. It's kind of been a really important way that we approach each deal, and ever since day one. So we're continuing to do that.
Absolutely. And the great part is when you're conservative and you're still underwriting to this base case, those returns that you're looking at are already inclusive of any fees that are included, all of your capitalized costs, including closing costs and those contingencies on the maintenance and vacancy reserve side. Not to mention, when we do overcapitalize, if there is an overage, that goes right back into your reserve balance, which is beneficial for everyone.
Absolutely.
Excellent. Is there anything else that you wanted to touch on the underwriting side?
You know what, we kind of walked through it top to bottom, and I think just the highlights here, as always, approaching it conservatively and fact and data based across the board.
Yeah, absolutely. And as a reminder, you can go in and on the property page itself, see your projected value through our property page underwriting tool in your base, bull, and bear case scenarios. And then if you go over to your analysis tab within your profile, you can actually see the line by line underwriting with all of your assumptions and the ability to stress test those assumptions for your cash flow outputs that are then on the bottom of the page. And we use this tool to underwrite all of our deals. We kicked out the old manual Excel processes. Shout out to Aton for building an incredible tool. And so we will continue to use that and be fully transparent about our underwriting. We want you guys to have just as much insight, if not more, into every opportunity that we bring to the platform. And so we're really excited to see this one go, and definitely go check it out.
Absolutely.
Awesome.
It's a good one.
Awesome. Yeah, really appreciate you, Michael.
Yeah, thanks.
Yeah.
Good
Awesome.
to see you back, Alex.
All right, let's get Alex back in here. There we go.
been told to bring it in a little bit. All right,
All right.
this way. There we go. All righty, so we had a chance to obviously walk through the rock house. I think Thomas put it in the chat, so feel free to go in and invest. I believe we've already seen a few investments in there, which is pretty cool. Did we walk through the actual calculator itself? Did we click into the calculator?
We did. I can pull that up as well.
Yeah, because I think I think what a lot of our investors care about too is just the underwriting itself. What we've seen is a number of the investors, yes, love to check out the property page itself and the high level overview that we put together. However, the actual line item by line item underwriting is definitely what sets us apart from some of our competitors even. So again, feel free to throw questions in the chat as we continue to go through. Does appreciation get paid out monthly like rental, or is that just paid back to us if and when we sell? That is correct. It's if and when we sell. Obviously, the goal is to sell. Target is 5 to 7 years. However, we are looking at a secondary exchange. We're targeting mid to late next year, with the goal being that you could actually liquidate at a moment's notice. And so that is on the appreciation side. Again, feel free to send any questions in on the chat. We're more than happy to answer. Really appreciate everyone joining. Are you still only looking for already operating properties with no CapEx budget?
Yeah, so typically we love stabilized properties. The reason being that we can get you your dividends the second that the property closes. There's no delay and kind of drag on returns, as we refer to it. We always like to see tried and true business plans. We always like to see actuals, typically on your trailing 12 annual performance, if not more. We like tried and true business plans. We are working on a newer product actually that's really exciting, and essentially it's purpose-built pad splits. So it's going to be developers that are purpose building these pad splits, stabilizing them up, proving out the rents, and then that's when we take over, cutting out the middleman, cutting out the premium that's typically associated with sellers that treat their business like an operating stabilized business, right? You get a shelled house, you turn it into a pad split, you stabilize it, and then you've created an operating business. And so naturally, a lot of sellers are going to expect premiums for those operating businesses. And on the buyer side, you're going to have to factor in those premiums into your underwriting going forward when you carry that value over your 10-year business plan. So
I do one thing to add on to that too is what we're seeing and there goes the video again. So sorry, apologies for that. We're dealing with a little bit of the technical difficulties. It won't be like this next time. Really appreciate, again, you bearing with us on that. Now on the premium point, I think right now you're experiencing a massive arbitrage opportunity as it relates to pad split. Arbitrage is obviously taking advantage of the inefficiencies in the market and basically the mispricing that occurs. And so every market, no market, I mean, Joey was, as he likes to always remind us, a Harvard econ grad. And so he really is on the market inefficiencies. All markets are inefficient. A truly efficient market doesn't exist today. The stock market tries to be that. However, they take advantage of those minor price differences in between the true value and what the market values it at. And so the arbitrage opportunity as it relates to the pad split operating model is a lot of Airbnb rental income producing properties, short-term rentals, all of them today fetch higher asset prices. It's no secret. And that's exactly what Joey was talking about on that operating model. Pad splits right now are in the early innings. So that arbitrage is so much greater than in any sort of operating model across the single family rental spectrum. So with that in mind, definitely feel free to add more questions in there. Really appreciate any questions that come in. Obviously bear with us on the video, but hopefully the audio is okay. Hello from Phoenix, probably a used question, but how do you handle 2 access points from the second and third stories?
How do you handle 2 access points from the second and third stories? So when you're talking about ingress, egress, I believe is what we're referring to. If there are separate ingress, egress points for different sections of the house, those will be keyed separately. However, in this case, it's actually, in the passive model, it's actually co-living model. So everyone uses the home like a common area, if you will. And the only domain is actually in the bedrooms itself. So the common areas throughout the rest of the home are shared, unless the bathroom is en suite or located within the bedroom itself, are also shared. And so it's a really, really cool model and very innovative. But we don't have to be as concerned with ingress egress in units like this because the entrances are shared, as are the garage and the in yards in certain scenarios. Obviously not here, but that's how it works.
Yeah, the ingress, egress, and the livable square footage thing is just something that you can take massive advantage of in the real estate space. I mean, I had a property, actually the Bowser in Dallas, Texas.
yeah,
It
big
was
property.
technically taxable square footage of 2,000, but it was actually a 2,500 square foot property. And because one of the rooms upstairs technically didn't have the livable square footage, ingress, egress that you need in a traditional property, especially as it relates to square footage and taxable square footage of that property. And so one of the many things that you can take advantage of as it relates to taxable square footage. So if a property, or wait, one question, Dylan. Yeah, I went on to a pad split this week and it looks like I went on to pad split this week and it looks like there are a lot more cities than just the 30 to 60 days ago. Thoughts? I mean, I can talk about the pad split business model, and then if you want to talk about the actual markets that they're looking to enter and how we're viewing those markets, that might be the best way to divide the question, if you agree. And so obviously, we're very friendly with the pad split team over there. Hell, we might hang out with them later this week, especially given the fact that we're about 45 minutes outside of their headquarters of Atlanta, Georgia. And so they are growing like crazy. Cliff and Atticus and the team over there have just been tremendous with us. And not to mention, they've been growing tremendously fast. I mean, their mission statement, I've never met a company with more people that when I ask, why did you join the company, have said the mission statement. Their mission is ingrained in everything they do. It's an incredible reason of why we work with them. I mean, they are just an incredible team operating wise, as well as their mission behind the affordable housing vertical. And so if you want to touch on the marketing behind it.
Yeah, I couldn't agree more. The marketing behind it, or the markets?
The markets.
Yeah, the markets. They're expanding really, really quickly. Michael and I have been having a lot of discussions around penetrating new markets. We're exploring a lot of MSAs now. Some of them in and around kind of North Carolina. Obviously, we're emerging in Texas pretty quickly. We love the Phoenix MSA. We've even looked around some of the more primary cities like Philadelphia. We've also looked at Charlotte and Richmond, which you saw the first Richmond property launch recently, Richmond, Virginia. And so they're expanding really, really quick. We have our eyes on a lot of markets. They are definitely in a rapid state of growth right now, which is really exciting. And we're really excited to be able to be a part of it. We love the operating model. It's incredibly friendly to the current economic environment. It's incredibly beneficial when you're looking at it from a risk perspective and from an underwriting perspective, both on the debt side and on the equity side. Honestly, a lot easier to qualify DSCRs when you have DSCRs performing above 1.5x on these properties. So it's really, really great. And we are super excited. So you will see a lot of pad splits being launched on the platform. We've heard your wants, and we're here to deliver those pad splits for you.
Yeah, I mean, one sold out in under 5 hours. That one, oh shoot, that was the Outcast. Yeah,
that's right. Yeah.
And if anyone was wondering why we named it that, it's because Andre 3000 is from there. Is that Michael? All right. I'm getting a nod. That is correct. He is from around there, which is great. Now, the second part to this question, I see Dylan sent it, and keep in mind, keep throwing in questions. We'll keep answering them. The second part, I didn't mean to cut over you, Peter and Brad. I'll get to those in a second, but given it is part of this question, yes, I mean, they are now in NYC, Portland, and SLC. So what are you saying is that you may be expanding with them? I mean, yes.
Yeah. Any new market that pad split is comfortable entering, we definitely want to take a look.
Yeah. So with that, if a property gets fully funded before the estimated close date, will it close faster, or does the estimated close date stay the same? So if the property is fully funded, we will go ahead and close on quicker. We're obviously the closing date, a lot of people attribute closing date with capitalization date and fully capitalization date. Really, the closing date is set in place prior to any raise occurring on the platform. So even if it isn't fully raised out, we at Mogul will close it out with our own fund or balance sheet capital and then continue to syndicate it out. One of those examples is the Johnson 2. It's been performing for 2 months. It's obviously one of our biggest raises to date, but we closed on the asset, back in July at this point. And so people can still invest in that. And so that is the answer to Peter's question. Really appreciate that. Brad, is Pad Split, the company, a private company still? I do believe so. They just.
Yeah, they are not a public company. Yeah.
Did they raise? Anyway, I don't Well, yeah, they're definitely private for sure, but
Yeah.
outside of that, the raise, all that stuff, I would have to double check on that. But sorry, I got into my like IB days.
Yeah,
Like,
I could see
yeah,
you were
I was
about
about to
to start. Yeah,
spin
you better
off.
start
I was about
diving
to
into the
spin.
fundamentals of it
I
all.
was gonna be like, the multiples aren't justified here on the revenue on the forward gross. But
What if it's a tech company?
it's a tech company, all right, 1,000 times revenue. I actually saw a tech company with over 1,000 times revenue.
That's scary.
It was scary, and they were trading very well. $1 billion plus
That's
company.
scarier.
Yeah, they're inefficient markets is what
True.
they, yeah. So here we go,
Yeah,
Dylan.
NYC, we got Portland, SLC. Expanding
Wait,
with them,
we-
we got
that's-
that.
yeah,
East Coast Path splits.
there
Yes,
we go.
we are getting some of those. As we said, we got the Richmond launch. You'll see more coming along the way. I don't want to overshare too much, but definitely a lot coming on the East Coast. How do most investors handle multiple K1s? Basically, I'm trying to trade off between diversifying my investments across many properties versus handling a large number of tax forms. So each entity gets distributed a K1 at the end of the year. We do tax filings for all of our LLCs. Each property company LLC there's 1-to-1. So there's one property company LLC per property that is launched. Those income statements and those annual filings are then filed for that LLC in Delaware. As a reminder, is where all of our LLCs are filed. And then those K1s are passed directly onto you as a pass-through entity. So you get to experience the potential tax benefits of owning the fractionalized real estate itself.
And then as for how do the investors handle multiple K1s, I mean, in terms of the individual themselves, how they're handling the K1s, it really depends how you want to attack it. Tax strategy is something that obviously we at Mogul aren't the ones crafting an individual's tax strategy. To make a custom tax plan, it takes years of not only training, but on top of that, understanding the individual, their wants, needs, and desires around their tax strategy. And so whether or not you're trying to avoid passive income or whether or not you're trying to avoid active income, that would completely determine different things. So by no means is this tax advice. However, when people do look at the many K1s, obviously, they could hand it off to their accountant and pass it on against passive income that they're getting for that passive loss. Or in addition to that, sometimes what they'll do is they'll bundle it up all into an LLC. We do a little bit more manual on the LLC investing. Sorry, I meant the complexity of the many K1s. For example, many CPAs charge $100 per K1 on the tax return. And so with that, yeah, I mean, that really depends on the CPA that you're looking to deal with. I would actually love to discuss that with you if you want to reach out, because I will say individuals have definitely just handed it off to their CPAs and let them determine it. But some people have wrapped them up in LLCs, and then that way they have one LLC absorbing all of it, and then they have that LLC basically attributed to their own individual. And some people have found that to be a little bit more efficient. But outside of that, yeah.
Then Alan asks, Alan Davis, one of our contacts in Phoenix. He asked about where can I find my K1 on the site?
Yeah, K1 on the site, piece of property I invested in. It depends on when you invested in the property. So it was for 2025 with the Houston property. Well, so 2025 K1s are not available.
I think he meant like for
2024
2024 investment, like filed in 2025.
Got it. So if you go in your property account, there is a tax form portal. All of the tax forms for the 2024 entities have been completed. If you don't have one in there, it's because it actually didn't need a K1 for that year. A lot of the forms, like Axelrod, for instance, I think closed in January of this year, but people could have invested in 2024. So technically speaking, it didn't need a K1 for 2024. How do you invest a non-U.S. citizen? Where can I find this? Oh, we answered that. How do you invest as a non-U.S. citizen? To invest as a non-U.S. citizen, funding method-wise, we have a number of different investment opportunities. You can do USDC, USDT, international wire, or credit debit. Right now, ACH we don't have for international investors. All right, so Joe, thank you, Joe, for joining us tonight. The number one pushback I get when I mention Mogul to people is the regulatory setup. Many people have asked how you're using the investment club safe harbor if some of the properties have more than 100 investors. Could you provide any more insight into why these aren't securities that should be registered? So, Joe, it's the same way that individuals, and unless you want to take
it. Right. I can add on.
Yeah, it's the same way that individuals, we spent the entire first year of this company's life entirely
devoted to the regulatory scrutiny of our operating model. And we worked with the team at Bela Wood across the board on every which way, that every contingency, every reserve, everything in terms of making sure that we were regulatory compliant with the investment club structuring. Now, the idea of the 100 investor threshold, it is guidance for the investment club itself. However, at the same time, if the individuals have governance over the underlying activities of the asset, then it technically still qualifies as an investment club, regardless of the 100-person investor. And so they used a number of other different cases to prove out that thesis as to why the 100 investors is more of a guidance than it is the hard and set rule. Now, as for the governance rights, that makes it so that it is an investment club rather than a securities offering. If you look at, if Joey and I were to go invest in a property on today, separate from Mogul, obviously we would have ownership and governance rights over the operation of that underlying asset. We don't have to register that with the SEC, and the reason being is because of that governance right. And because of that is why investment clubs were created by the SEC, to still be compliant with SEC guidelines and create this separate classification of financial investment club setup, so to speak. So I don't know if that fully answered, hopefully that answered it, but if you—
That's spot on. Yeah, absolutely. The governance mechanisms that we've meticulously put into place that you can find in the operating agreement outline all those governance mechanisms that Alex just kind of touched on. And that is the reason that we're able to exercise that Jobs Act, what do we call it, regulation.
And not to mention on top of that too, I think with the investment club setup, it is really important to look back at why they did this. I mean, people were literally on tennis courts investing in real estate together, and the SEC was like, how the hell do we regulate this? And so that was what they came up with.
Yeah. We have another question here. How do you find the actual addresses of the properties quickly? I would actually recommend going to the analysis tool. As you see here, if you click into the properties analysis tool, you'll find the address. Right, the name will be up here when the property is launched, and then you'll find the address next to it. So that is a great place to look as well. Obviously, you can download the PSA, you can look in there, but it is a feature request to make it more accessible. So maybe we can think about that.
Yeah, and Eitan's back there right now, probably hacking
already
hacking away, already creating that solution for us. All right, so Leoncio Garcia said, why should I invest in— wait, that was the one from Peter, right? Correct? You just—
Believe so.
You didn't read it verbatim, and so you threw me off.
Oh.
Like Ron Burgundy, you got to read directly from the card. Anyway, why should I invest in the Mogul Club platform versus Roots, Arrive, Realbirds, etc.? I mean, this might set me off on a tangent unless you want to tackle it. I don't know. It completely depends if you want it or I want it.
Give an anecdote and then I'll hop in.
Anecdote
instead of a full tangent.
Yeah, I mean, really it comes down to the fact that look at the look at the founders, B, look at the quality of the assets that we bring to the platform, and then C, look at the asset classes that we're playing in. The founders. Crazy enough, and I swear to God, you can look up every single one of these founders. We're the only founders that were actually in an institutional real estate investing, I mean, mecca, so to speak, before we started one of these platforms. A number of these other different platforms of our competitors were started by software engineers that saw novelty and an ability to sell real estate online without giving any of the returns commensurate with investing in real estate. They capitalized on it and they were the earliest movers. That's why they grew to be so quickly, because everyone wants access to real estate. But how can you get access to real estate when they actually aren't giving the returns of real estate? So that's number one, is the founders. Number two is quality of assets.
Product. Yeah. People is number one. Product is number two. And ultimately, the biggest battle test for the Mogul platform is we'll put up our product against anyone else's product any day of the week, especially within residential real estate. We definitely pride ourselves on finding the best possible assets. You know, Michael and I work with inbounds of assets every single week, and we're saying no to deals that are underwriting to 7-8% yields before they're hitting that 12 to 14% IRR even. So we really we have a very strong sniff test to be able to pass the kind of back of the envelope writing before we even consider putting out an offer on these. And then we're negotiating on these PSAs. Ultimately we're getting the best possible terms. I couldn't be more adamant about the fact that it's a massive buyer's market right now. And as Alex said, there's incredible arbitrage opportunities. It's an incredible time to be a buyer. and an investor in real estate. And so we pride ourselves on the product we put out there. Our product is tried and true and battle tested, and we thought through all the contingencies from A to Z. And ultimately, we want to stack up. Yeah, we want to stack it up against competition.
And I think one last thing that I'll add in there, because the third prong to it is the asset class that we play in.
Mm-hmm.
End of the day, a lot of these other different platforms, I know some of them touch in commercial real estate, some of them don't touch in commercial real estate, but if you look at the assets that are on their platform, a lot of times they are assets that Goldman or Blackstone have passed on. And really it comes down to the fact that if you are a seller and you're going to the closing table, and in times of abundance, of course, the seller can actually interview the buyer and assess the execution risk of that buyer. Now, why on earth would a grade A asset be interviewing with a platform with even a slightly higher execution risk? Now, that's why a lot of these other platforms get the assets that we at Goldman were passing on. I mean, hell, coming out of Goldman, we were looking at these platforms and obviously looking at the assets that they had. A lot of them were on the pipeline that we said no to at Goldman. Mm-hmm. That is a ridiculous thing. It's because they're getting these commercial assets that really there are only one buyer, and they're trying to repackage it and sell it. And because it looks like commercial real estate, everyone's like, oh, it's stable. But at the end of the day, it's really being bought in a way that isn't accretive to the end investor. So obviously we can go on a million different tangents, a million different ways as to why we're better. At the end of the day, if you're confident in your business model, if your customer is approached by a competitor, you probably are okay with that, because of the fact that you are putting out incredible product and you feel such confidence in the assets that you're putting out. Other platforms have actually come to us and said, please don't reach out to our customers. And so a lot of our customers and clients are actually investors from other platforms. That might be slightly inflammatory. If that person is watching, or those people from the other companies are watching, they probably know who they are in that regard. But I mean, no harm. It's just a principle that Warren Buffett taught. So he probably knows nothing about business. Zach Atkins.
I think one last thing is transparency, right? Got to touch on transparency. Transparency is definitely something we pride ourselves on. I think, I don't really know any other companies that are doing monthly dividends out there. I don't really know any other companies that are welcoming scrutiny on their income statements, providing everything, again, from A to Z in terms of full operating agreements out there for all the investors to see. Obviously, every single term of the PSA out there. Transparency is super important. I won't go on a long tangent, but
just were you calling my tangent long?
No, it was great.
You sneaky son. No. All right. Zach asked, when will the images of the Roman 2 be updated, or are they already up to date? Michael?
Furnishings are being delivered. We're going to put the pictures up after it's furnished.
Furnishings are being delivered. We're going to put the pictures up after they are finished. So those are coming up soon. Brad, I found quite a bit of information on the previous owner, the STR company of the Alcrest. Can you touch any more on why they decided to sell this property in Mogul, or if there's an opportunity to buy more properties from them?
So we longtime point of contact of ours actually out here in Atlanta, that works both on the brokerage and operator side, brought us this incredible opportunity off market. He actually wasn't even looking to sell it. Put the fundamentals out there for us to see, was fully transparent about the T12 operations. We took a look at it. Michael and I were immediately intrigued. Location, the yield, obviously, that this property brings. It's right there on your screen on the underwriting. Fundamentals, sniff test on location. We really, really love, again, the Atlanta MSA and the surrounding market. So it was kind of a no-brainer, honestly. We had an incredible opportunity to structure, create a PSA with a longer closing timeline, given it's such a massive deal. But again, with the opportunity to close earlier, always the only thing you can't do is close later. So having a longer PSA timeline to complete all of those contingencies, including your inspection contingency, your appraisal contingency, your financing contingency, keeping you as the investor safe as possible, getting our loan in place, getting everything ready to close. This is an incredible property. Can't really say anything more than that.
Yeah, I mean, it really speaks to the fact that we do practice what we preach. The fact that our first company retreat, our first company offsite was at a Mogul property, and we will continue to do this. I mean, hell, property credits are incentive structure at Mogul too in the real estate themselves. And so again, everyone benefits when the real estate and the underlying real estate benefit is performing at the underwriting or above the underwriting. And so that's what we're going to continue to do, is continue to put out quality assets. And the Alcaraz is just another example of a quality asset. We would have chosen any of the assets on the platform. It just so happened that with the team growing, we needed one of our biggest, and this is one of the biggest. It's been an incredible time out here.
And if you want to check out any of the properties that you're invested in terms of going and staying, we can actually definitely get you an incredible rate. So feel free to reach out. And we can facilitate that for you.
Oh yeah, definitely. Yeah, because we had a few investors ask about that too. Yeah, it won't come at any expense, by the way, to the end investors. Returns won't be hampered in any time. It's just the extraneous fees of booking through any of the major booking sites are what we're going to try to avoid there, which will obviously give us a higher return to investors. Brad said a lot of thank yous, so thank you for the thank yous. BTW, love the Alcaraz after all the research I did on it and the lake in the area. I mean, we love it too after this week, so it's been great. Alan said, are you still marketing properties without raising dollars before you are actually closing on them? Yep, so it's typically post-inspection period, pre-closing timeline. So at that point, the execution risk is de minimis. We've gotten kind of feedback from our lender that the property is likely moving forward with a strong conviction, and having done a number of properties for us at this point, the execution risk past that point is nearly zero. Of course, if something comes up in the last minute, in the ninth inning, so to speak, then of course we will be transparent with any individual that invests in the properties. But with that being said, we do typically raise in the post-inspection period, pre-closing timeline.
Yep, and that's why that closing timeline is important. Again, while we're simultaneously working to diligence and close the property, we're raising it on the platform. And in the event that the property doesn't close, your dollars will be either returned or reallocated per your choice.
And then Peter asked, tennis fans, is that where the name the Alcaraz came from? Yes. I would say outside of that, I mean, Joey played in college and was going to do European tour.
Europe, yeah.
Did a cup of coffee in the Europe tour.
Yeah, exactly. Failed tremendously.
Yeah. And then how we met was actually playing tennis. I took a few games, which is shocking, like that I would take a few games for a European tennis tour player, but it came.
I always say he's the best unformally trained tennis player I played against, which is a high compliment.
That sounded so sarcastic. It hurts. It drips in sarcasm. Anyway, I'm a tennis fan as well. Nice choice. Yeah, great match, Sinner, Alcaraz. I think we're going to see a number of those coming through. Steven, do we have a judge coming online? Maybe a Jeter? I mean, absolutely. If they win the wild card, I mean, what's the score right now? 1-0 Yankees. So if they win the wild card, you can expect a judge coming online for sure. What is it? Above 50 home runs this year? Yeah, definitely.
It's gonna have to be a massive property.
Yeah. It's got to be a home run of a property.
Okay.
I didn't like any of those boos, but I'll take them.
What is our goal regarding how many properties we want to hit by the end of 2026, which is next year? So
a property per week. Right now, we're targeting at least a property per week. Right now, we're doing at least 1 to 2 properties per week. Last week was 2 properties. This week is 1 with the Rock House. So feel free to check out the link that was sent in there. Thomas, if you could shoot it in, that way people that just joined can look at it. But yeah, we have how many weeks left in the year? We have 12 weeks
for
left?
2026.
Oh, 2026.
Mm-hmm.
Jesus. All right. 3 per week the next quarter, and then 4 per week the quarter after that, and 5 per week. And then at that point, we're going to count hundreds per month.
We have our work cut out for us, and we're working towards the goal of ultimately being able to release the secondary exchange, which takes a certain amount of AUL on platform to facilitate that line of credit that acts as that liquidity provider. So that's the active goal that we're working towards, and we want to get there as fast as possible.
Perfect. All right. 1-0, Steven. Thank you for the update. Yeah. Ryan is a massive Yankees fan back there. So he was on pins and needles when he answered questions for us earlier. We need a Cal. We need a Cal.
I assume that's a reference to another name.
Yeah. Another. All right. I'm getting a thumbs down for that one. I'll free up cash for that then. Those are how investors fund and earning protected in Mogul Club. So when you're investing, geez. Yeah, I didn't even think about that. All right. That's on me. That's on me. It's been a long day. How investors funds and earning protected in Mogul Club. So when you invest in each property, what you're doing is investing in the PropCo LLC itself. And so you actually own part of the asset. And so the asset itself has an LLC attributed to it. So you have limited liability as it relates to any of the operations for the underlying asset. Now, outside of that, I mean, we can.
Contingencies.
Yeah, touch up.
So there's two types of contingencies that we capitalize, and you'll see in the underwriting a maintenance reserve and a vacancy reserve, typically around 3 to 5% each of the property's purchase price. Those are there to protect you and us as the investors in the case that the property is not cash flowing and or needs a maintenance replacement on something that's not covered by insurance, which is obviously very rare. But that's what they're there for, just in case. And on top of that, we take out two forms of insurance. So we take out the dwelling insurance itself, and then the liability insurance that comes with the owner's policy. And so being that these are investment properties, we have to be protected against liabilities, right, when it comes to owning and operating the property. But on top of that, loss of use, which is equally as important. So in the event that the property is not able to be operated, we're covered for loss of use. And that's actually going to be on a historical performance, typically on the past 3 months. So that's what we've seen. And we have case studies where that has happened, and it's benefited the investors tremendously.
So we got a few more questions. That's why I didn't react. Great answer. Brad, I'd asked in the club, but we'll ask here also, do we know for sure that the Alcaraz has the needed Bibb County permit to operate as a short-term rental / boutique hotel? I didn't see that noted anywhere.
For the permit?
Yeah.
We can definitely check in on that. I don't have the answer off the top of my head, but we can definitely get back to you and make sure we follow up.
Perfect. And then Joe Cachpaglia, sorry if you'd already addressed this as I stepped away for a minute. Is there a reason you're comfortable with the particular HOAs that the Scheffler and McElroy are in? I know Pad Split usually recommends avoiding HOAs.
Yeah, so we talk with all of the homeowners associations that our properties are located in. We actually have a few. The first one one of the first ones we ever launched was in one out in Rowlett, Texas, and we just need to make sure that we're open with communication. Ultimately, we reach out, let them know that we're operating the property as an investment property, obtain any of those permits that we need to obtain. And in the event that the permit's not already in place, we go out and obtain them with our property manager anyways. So that's also a touch on the previous question. But it's just over communicate and then definitely do your diligence. If HOA docs require that you aren't allowed to use the properties in certain ways, then obviously that's going to be a huge pitfall to even investing in the property in the first place or closing on it. And so, we definitely diligence that through the diligence period, and we'll exercise a contingency if that were to come up as an operational deficiency.
Perfect.
Yep.
Great answer. We got Calarelli. Yeah, that was from How About Those Mets? I have no words for that. In case of bankruptcy from Mogul, that was tagged on to the earlier question from Leoncio. So this is part of the beauty of our back office is it's all based on blockchain. And so what that means is you can verify your ownership in real time, even outside of our platform. Now, in the event that we were to go away at Mogul, and keep in mind, we've got a long runway, so to speak, at least the next 10 to 15 years, you'll be seeing our face every last Tuesday of the month, hopefully. And so with that, you actually, in the event that anything were to happen, then it would just be transitioning over to an email rather than a pretty UI UX. And so what that means is because your tokens are registered on chain and you, again, need to know nothing about crypto or how the inner workings of blockchain work, just know that it is a more efficient back office that allows us to take lower minimums, and it allows for, in the event of worst case scenario, you all can continue on operations without any hiccups. So they are completely detached from us at an arm's length, and that means that you as investors are protected from Mogul, any risk on the Mogul side of things. And so that is that answer. Are you still just doing DSCR loans?
Yeah, we are. So as a reminder, all of our loans are debt service coverage ratio qualified, meaning that the property's cash flows qualify the loans themselves. And we do take out interest only loans, typically on a 10-year plus schedule, where you're only paying the interest, not amortizing the principal down by paying additional principal payments. That frees up more free cash flow, post OpEx and post debt service for you as the investor. And we will continue to pursue those, especially as rates come down. It's highly beneficial.
Creative leverage.
I love that word.
I actually do. I love the word accretive. Anyway, had to leave soon, but wanted to say thank you for doing the meeting. Thank you, Peter, for attending
Thanks,
the meeting.
Peter.
Obviously, it sounds so cliche, but we couldn't do it without everyone that's on this meeting. So really appreciate that. We've got a hidden question outside of the chat. Let me just double check. Are we available to withdraw? How do we cash out when ready? And so that goes back to the secondary liquidity. And so again, 5 to 7 year average hold period for the underlying asset. We'll put it up to a vote during that end of the 5 to 7 years on kind of a weekly, if not monthly basis. And from there, you would be able to just withdraw it. And how do we cash out when ready on the rental income? At any given time, you can withdraw the rental income. That is,
So you'll see that flow into your account, and you can either reinvest it or withdraw it straight to your bank account.
Perfect. And if anyone has any last questions too, we are running down to the last 3 minutes. Is the secondary liquidity feature on target for Q2 2026? That is when we are still targeting. It will be likely the end of Q2 2026. I know you guys are busy. Was the best way to reach out for one of both of you? Nice job, great call. Thank you, Alan. Really appreciate you joining. I would reach out to which email? The support at Mogul.
Oh no, we were. I was the point of contact in Phoenix. We can contact you, Alan. Michael is now working on acquisitions along with me, so we will be in touch.
Perfect. Jay, Lauren, thanks guys. Very interesting. Yes, keep up the great work. Is liquidity only for selling or also to possibly buy older properties? Exactly right. Both. It would be, the idea is, again, I can go to a longer spiel in terms of liquidity behind it. I know Joey has heard me get rant and rave about exactly how to do it, but the idea being that you could cash out at a moment's notice at the true mark-to-market value of the asset. Simultaneously, anyone could technically pick up and buy the secondary interest on the secondary exchange, which, again, technically speaking, if properties appreciate at the rate at which the the rental income is appreciating, technically speaking, that year one yield will continue to move forward into the next year. Again, it might be a little bit fluctuating depending on the market in terms of the demand for the rental income versus the property appreciation, but it should theoretically balance out over time, which would be creating an incredible market dynamic, especially for a truly liquid secondary. Now, in the last minute here, if anyone has last questions that they want to, feel free to shoot them out and we're more than happy to answer. If not, really did want to thank you again and thank you all for meeting the team and thank the team for joining us. They're all back there in the kitchen. So, and thank you for dealing with the technical difficulties. Obviously, next time we will be not in Lozella, but next time we will be with stronger Wi-Fi signal. Anyway, thank you so much, everyone.
Appreciate y'all bearing with us on that.
Keep up the emails. The communication is hugely helpful too. Thank you, Dylan. Yep, we will continue to keep up the emails. We are dedicated to the complete transparency of all of our assets and continuing that open line of communication. So thank you again. Thank you everyone for joining us and looking forward to joining next time, I guess.
Roger that.
All right. Thanks so much. Appreciate y'all.